Hello and welcome to Let's Talk Money. I'm Vivek Law. Today we put the spotlight on gold, an asset class that has been taking a beating of late. Well, we all invest in asset classes to save money, and gold is considered a safe haven. With gold prices witnessing a sharp fall in the past few days, there is a dilemma among investors if this is the right time to invest in gold or not. Today we will discuss about gold and what an investor should do, not just in the current scenario, but even otherwise while investing in gold. How much should you invest in gold? Should you invest all your money in gold? These are some of the questions we'll find answers to today. Gold is losing its sheen. The value of gold, being a safe haven, is fading away as investors are looking at financial assets like equities. Investors are still in doubt whether it's a right time to buy gold. Let's see our special report on gold.
A yellow metal is losing its shine, making investors doubtful about the investments in gold. If you look at the current scenario, gold prices have seen a drastic fall since the beginning of this year. Gold prices fallen to 5-year low. The yellow metal was at Rs 25,100 per 10 grams on 22nd July 2015 against Rs 18,250 per 10 grams on 22nd July 2010. In 2013-14, prices hovered at Rs 27,000 for 22 carat gold. Past 4 years given an annual return of just 6.5%.
If I am a buyer, if I want to invest, I would like to invest at least 50% of my current now. Because as I look at, I don't see it going down too much. But going up, yes, better. Going down 2%, going up 10% in the next few months. When I say few months, 6 months say. So the chances of it going up is more than going down.
Many investors are surprised with the fall of the yellow metal from a high of Rs 32,000 per 10 grams in 2013 to Rs 25,000 levels today. But investment in gold proved remarkable from 2006 to 2011 with an average return of 29%. Let's compare how gold has fared during last 5 years against other asset classes. During the last 5 years, gold has been the worst performer among other asset class. Gold has given 4.89% return. Equity large cap has given 10.6% return. Equity mid and small cap has given 17.18% return. Gilt medium and long-term return has given 8.4% return, whereas hybrid equity has given 12.05% return. According to data from World Gold Council, it shows that investment demands for the yellow metal in India fell from last 3 years. It fell to 41 ton in the quarter ended March 2015 from 122 ton in the quarter ended June 2013. Whereas demand for jewelry dropped to 151 tons from 188 tons, in mutual fund investors have redeemed Rs 231 crore of gold exchange traded till June 2015.
If you are near the bottom, it's a good time to buy, and at least 50% they can buy now. They can wait for 10 days, 5 days more, how the market moves. They can buy some more in pieces, in small pieces they can buy. Or the best course is to buy in SIP.
Gold as an investment option arises a lot of questions in mind. If you still cannot resist yourself from buying gold at these levels, then there are a lot of options one can go for. You can buy jewelry, invest in gold coins and bars, gold ETF, gold funds and equity-based gold funds are the options you can look for. But remember, not to invest all your money in gold.
To discuss more about gold, joining me now is Somasundaram PR, who is the Managing Director India for the World Gold Council. Thank you very much, sir, for coming by and sharing your thoughts with us here on Let's Talk Money. My first question to you, which is perhaps on everybody's lips right now, what's really happening with gold? Prices seem to be falling. We're hitting 4-year, 5-year lows. What according to you is the reason for that?
As you know, we don't give a price forecast or discuss future price movements. But what I can say is, you know, on the demand side, given the softening of the prices, we see that you know, customers are coming back in a big way, and there are also the positive things like the monsoons being very normal. So we expect that once this low season passes, the festive season, which is just a couple of weeks away, we'll see a big jump in demand. We have estimated the current year demand to be 900 to 1,000, and we believe it would happen.
How would you look at the demand trends over the last 2 or 3 years, Mr. Somasundaram? We are the biggest consumer of gold, isn't it, we as Indians? How has the whole demand picture progressed over the last 2-3 years? And on the demand side, not asking you on prices at all, but on the demand side, how do you see things playing out over the next 2 to 3 years?
One of the things is, as Indians put part of their savings into gold, as the GDP increases and savings increase, the money that flows into gold keeps increasing. If you see the last 2-3 years, let me get to the figures. It was 974 tons, and then it was 841 tons last year, and this year we are expecting it to be 900 to 1,000 tons. So the 974 tons in 2013 was driven largely by a very sharp drop in April, which we all recollect, about 28% drop in prices, which led to a huge increase in demand. So if you see, therefore, the trend has been around 800 to 1,000 tons of demand, with annual changes based on how people's savings have grown, and inflation has been a factor which not only moved people towards gold, but it also shrunk the wallet. So Indian demand scenario looks very positive. In fact, even the jewelry industry has done some very good things in the last couple of years. You see foreign investment flowing. So it looks positive for the gold industry in India and for gold demand.
Do you see it continuing to be an ornamental product rather than an investment product? Because if you look at it from an investment point of view, it hasn't really delivered very good returns, but yet we Indians love owning gold. And if you look at the product mix, are you seeing an increasing trend towards people moving to, say, a gold ETF or a gold mutual fund to hold it in a paperless form, or is the trend still very ornamental in nature?
See, jewelry drives the demand in India. 80% of the demand comes from jewelry, of which more than 50% comes from bridal demand. That's the nature of demand in India. Investment demand touched a peak of 38% in 2013. It has dropped to 22%, which is the bars and coins and ETFs. ETFs in India are very, very small. It's hardly $1 billion at this moment of time. At its peak, it was $2 billion, about 35-40 tons. So bars and coins, on the contrary, have very, very large, although in proportion it seems to be only 22%. We are talking about 180 tons of demand here. So in a sense, therefore, and also jewelry in India is bought more for the value of gold rather than for the brand value. So if you really look at it, people look at jewelry as a form of investment. It is just that it meets both the objectives. So as we see that jewelry will continue to be the main driver of demand, but it is not purely for ornamental reasons. It is also because people see it as a form of investment.
But what is your own sense? Do you see returns from gold increasing after, we saw a very good bull cycle where prices just kept going? I know you don't forecast prices. I'm not asking you to predict a price point, but today there is this whole sense among people that prices are falling very sharply. Any product or any market is cyclical. Do you think that gold is right now in a bearish cycle and it could take a few years for it to come out of that?
See, we have to look at how gold has played a part in the household portfolio. It's a second investment after fixed deposits, as we all know. Amount of gold in India is in excess of 22,000 tons, which is $1 trillion. That's household wealth. People have gold is seen as an intergenerational asset. So it is not that every day people wake up and do a mark to market on gold. Probably a few people who invested in ETFs will do it, but a normal jewelry buyer sees it as a asset which is just passed on to through generations. So in the long term, people still continue to have a huge faith in the price of gold, and which is something which is very right as well, because if you see all the economies, leave the short term factors aside, all the economies, there is no consensus on any asset class as of now. There are discussions which says, okay, equity markets here has grown, and real estate is bloated, and equity markets will continue to grow, but there is no consensus. Everybody understands there is a huge amount of uncertainty because of lot of money that has been printed, whereas gold has its place, and in the long term, particularly when there are so many uncertainties, I think gold has a very significant role.
How are you reading the situation out of China at this point of time? Because that again is being spoken of as one of the reasons for the recent fall. Could that turn around quickly? What is it that you can tell us in terms of what's going on in China, and how is it impacting gold prices here in India?
Yeah, China, obviously the equity market in particular, there was quite a lot of shift towards people moving to the equity market. But it's also important to know, even in China, shadow banking is a very, very large segment. And wherever these factors remain, gold plays a very significant part. Yes, in the short term, we do see that certain factors have affected the demand in Q1, and perhaps we have to wait for the Q2 figures. But it's to do with the fact that in 2013 and 14, Indians and Chinese stocked up a lot of gold because of the low prices. They saw it as an opportunity. So 15 is to some extent muted because of that. Second thing, if you look at the Chinese central bank, they just announced, after a long time, that in the last 6 years they have accumulated 600 tons of gold, more than 600 tons. So as we see the Chinese government policy of making RMB, an international currency, I think gold will play a very significant part, both on the official purchases as well as when the gold consumers return to buy gold. These are very, very short-term factors that we have seen in the last couple of weeks or so, and I don't think it would be right to just extrapolate it, because gold cannot be extrapolated based on short-term factors. You'll have to look at it over 20-30 years, and they have always played a part.
Thank you very much, Mr. Somasundaran, for joining us here on Let's Talk Money. Appreciate you coming by and talking about gold, one of India's most favorite asset classes for all of us Indians. Thank you very much. Welcome back. You're watching Let's Talk Money here on India Today Television. We're talking about gold, and is the worst over for gold or not? And of course, lots of questions that have come in from our viewers. To discuss all of that, joining me now is well-known certified financial planner Suresh Sadgopan. Suresh, when it comes to investing in gold, the one big mistake I guess most of us Indians make, given our love for gold, is that we confuse the bit about investing in it or owning it from an ornamental point of view. How would you solve this confusion that we often carry about gold?
As far as investing in gold is concerned, it is ideally done in the form of financial instruments. I would suggest ETFs as a good choice. But if ETFs are a problem for some people because they don't have a demat account, probably they should consider mutual funds. But otherwise, if somebody wants to buy jewelry from ornamentation point of view, from consumption point of view, we actually consider that as an expense, and we normally provide for those expenses in the overall financial plan itself. So these two should not be confused. Only when gold is invested in the form of bullion or in the form of financial assets, then it is an investment. Unfortunately, now gold is in probably a secular down cycle. Probably it is going to last for another maybe 20 years. That is what the market pundits say. For another 20 years, it is expected to be in the down cycle, and there are several reasons for that. So it is I mean, it is in the fitness of things to examine one's gold investments, whether one should do a gold investment at all, purely from the point of view of long-term investments. Yes, gold has a place in the overall portfolio. There is a level of asset allocation which we can have, but that has to be decided based on the requirements of that particular person, the goals that they have, and what they want in future.
So how much of your investment out of your total basket of investments, Suresh, should be in gold? Just about 5 to 10%? Is that the ballpark one should look at?
Yeah, normally we talk about a 5-7% kind of a ballpark, going all the way up to 10%. But a lot of it actually depends on the kind of portfolio that a person has. Gold as an asset, I mean, does not really produce any returns to speak of, unlike in the case of equity or debt or property. So it has to be a real long-term investment, otherwise it will probably not make sense. So we will have to take that call on a case-by-case basis. So I would say that we should not look at where the gold is going to go in the next maybe 5 years or 10 years. And it should be a part of our strategic allocation if it makes sense in the overall portfolio.
So if I were to go back 10 years, 15 years, 20 years, any of these periods you want to pick, Suresh, or which you have closely analyzed, you made this important point that gold is not going to get you the kind of returns that perhaps certain other asset classes are going to get you. So if you could give us some perspective that equity versus gold, for example, because again, we Indians love real estate, we love gold, and we prefer sometimes, and I know of people who probably invest all their money in either real estate or in gold, and that's not prudent, as you just mentioned. From a return perspective also, because we do keep seeing spikes of sudden rise, and somebody would say, therefore I made a lot of money in gold, and then go and tell all the friends that, you know what, this is one asset class in which you can make a lot of money. So give me a perspective over a longer term period between these asset classes.
See, the toughest question we as financial planners face is which of these asset classes is going to give what kind of return. So if you ask me whether equity is going to give, let us say, continue to give 17% return or a 20% return or a 10% return, it is very, very difficult to predict the future. So the point is, even if we go back into the past, and even if we talk about a say 10-20 year period, there are periods where there is a bull run. Like I was talking about before, 2001 to 2011 was a bull run as far as gold is concerned. So suppose somebody were to accurately predict this period, I mean with the benefit of hindsight, and invest in 2001, and they held it on to 2011 and actually sold it, then the returns would have been phenomenal. But the problem for most of us is that we really cannot predict, and we can only predict it with the benefit of hindsight. So gold has given a 6 to 7% return over a long period of time, and equity has given a return of say something like 17% over a long period of time, which is about 35 years. So that is the history. So if the history can be extrapolated into the future, equity does appear to be a much superior asset class as compared to gold. Having said that, I mean, we should have all these asset classes in place as a part of our overall strategic allocation. So I would not really say that gold, since it is going to give probably 6 to 7% return, we should not have in the overall portfolio. Like I said, it is a good diversifier. It is not correlated with currency. It is not correlated with any other asset class. So we should have a mix of all these things and not overdo in any particular asset class. That's what I would say.
All right, Suresh, lots of questions coming in. Joining me is Amushri Jha, who has a question. She's from Ranchi. Hello, Amushri.
Hello.
Yes, Amushri, how are you?
Yeah, hi, I'm good.
You want to buy gold?
My question is, actually I've already invested in gold in 2013.
Okay.
And I want to invest some more because the prices are slashing down. So just wanted to know that is this the right time to invest in gold, or I should wait for some more time?
Have you also invested in other asset classes? Have you got your equity component going? Have you bought insurance? Have you bought health insurance? Have you done all of that?
Invested in gold in 2013. So because of my marriage purposes, I want to buy some more gold.
No, I'm asking you, have you also invested in equity?
No, I haven't.
Have you bought insurance for yourself?
No, I don't have. I
So
haven't
your only investment is in gold?
Anywhere else except gold.
I don't think you're doing the right thing, Amushri, because putting all your eggs in one basket is never a prudent thing, and certainly not all of it in gold. Suresh, she bought the first time in 2013. She wants to buy again. As you heard her, she has no other investment. Do you agree when I tell her that that's not a right thing?
she has an impending marriage. So if she is talking about accumulating gold for her marriage, I would consider that as an expense. It is not really an investment. So if it is primarily from the point of view of buying gold for her marriage, I would ask her to not postpone that and do it right now, because you never can predict the future. It can go down, and if there is a problem in Greece, it can even go up. So the point is, as if it is only for marriage, I consider it as an expense, and it should be done right away. But if it is not, then I would probably not advise gold investment at this point in time. Like you were rightly pointing out, she has to diversify her asset base into other asset classes.
All right, Suresh, there is another question that has come in through an SMS from Shilpa Jain. She's 32 years old. She's from Kolkata. Her goal is that she wants to invest in gold for my children. And her specific question is, I am Shilpa Jain from Kolkata. I have invested 5 lakh rupees in gold for 4 consecutive years. My question is, prices of gold will fall further or not? I want to invest another 1 lakh rupees this year as well. Should I go for some other investment options? Again, Suresh, young people who seem to be putting all their money into just one asset class. Of course, in her case, she's been doing it periodically. She's putting in, 1 year every year. But even so, again, the sense I get from her messages that she seems to be a complete gold fan. Is that a right approach, especially for these 30, 31-year-old bracket where you can actually invest in equity and build your wealth?
She's talking about her children's education or future. So, I mean, that I guess probably is maybe beyond 5 years. So, considering her age, probably it is 10 years and beyond. So, considering that, probably equity as an asset class will probably work much better from her standpoint as compared to simple gold investments. She already has investments to the tune of 5 lakh rupees. I think putting any further money into gold may not be called for at this point in time. She can even consider, maybe again, considering the overall portfolio that she has, she can consider even trimming down the current gold exposure to some extent and diversify into other asset classes. I don't know about the other components, so I cannot really answer that to a nicety.
All right, Suresh Sadgopan, thank you very much for joining me here on Let's Talk Money and taking questions of our viewers. Thank you.
Thanks, Vivek.
All right, it's time now to say goodbye. If you have any query relating to equities, mutual funds, real estate, insurance, then do write in to us. Goodbye. Have a nice week.